Now, the last few years have been decent, 2.2% growth across the developed world. That's better than what we had been doing previous years, but nevertheless, it's only half of what we were doing 30, 40 years ago. And there are many reasons for that: lower levels of productivity growth, falling birth rates, et cetera. Nevertheless, growth in developed economies has fallen significantly. 20 years ago, developed economies generated about 80 to 85% of the additional economic output in the world. Today, it's only about 50%, and the number continues to fall year after year. But what about emerging markets? Well, here's where the growth is. Now, imagine this fictitious company I mentioned before. Well, your grandfather probably didn't do any business in emerging markets in the 50s and 60s and 70s. Most major emerging markets weren't even connected with the global economy. Then your mother, when she took over the business, she took it over at a time when these major, large but poor economies were joining the world economy. So she probably looked at it as a place for production, a place where we can source goods cheaper than we can at home. But now in the last 20 years, we're looking at these emerging markets increasingly as markets for our goods and services. And look at the rate of growth they've been achieving over the last 20 years. 5.5 or 5.6% growth for emerging markets per year over the last 20 years. That's 3 times the rate of growth in the world's wealthier countries. Now, there's big discrepancies also among emerging markets. And one of the big discrepancies that you have Asia on one side, which has done tremendously well, and the rest of the world's emerging markets, most of which have struggled in recent years. Of course, the one everybody looks at is China. Now, China grew by an average of 10% per year from 1980 up until the beginning of this decade. That's real growth. The Chinese economy really grew by about 10% per year. Now, we know the GDP numbers and a lot of the other data that comes out of China is made up. It's fake news, call it what you want. It's not real. But over time, as I mentioned in many of these presentations, the Chinese government was trying to show that they were managing the Chinese economy. They weren't trying to exaggerate growth. They were trying to show we control the economy. There were many years when they underreported growth, where they would say, yeah, the economy grew by 10% when it really grew by 15. And there were other years where maybe it grew by 8, but they said it grew by 10. They were trying to smooth the volatility within the economy. Now, we saw in 2015 a lot of market volatility in China, and that was the first time where the Chinese government really consistently exaggerated the rate of growth in China. There was a recovery, 2016, 2017, the economy did pretty well. But in the second half of last year, we estimate that in reality, the Chinese economy only grew by about 1.5%. Now, we're showing the official numbers there, like most people do. But in reality, the Chinese economy has hit a major speed bump. There's a number of reasons for that. There's the trade war. Of course, that has had a major impact on Chinese exporters. Not just with the US, but if you look, a lot of China's key export markets, they've done rather poorly in recent months. So Chinese exporters have been hit hard, but of course, what was saving them? Chinese consumers. Consumer spending growth in China was more than 10% per month consistently until just a few months ago. And we've seen just over the last 3 or 4 months a major slowdown in consumer spending growth in China. So China's getting hit on both sides, both at home and abroad. And that's been bad news for the Chinese economy. Another issue they have is debt. Now, if you look at debt, a lot of times we focus on public debt. What is the share of public debt to a country's GDP? But if you look at total debt, so all the private sector debt, whether it be financial debt, whether it be corporate debt, whether it be personal debt, China's total debt level is 3 times the size of its economy. No emerging market in the world has that level of debt. Now, the Chinese government realizes this is a potential risk, a significant risk, so they've tried to rein in lending. They've tried to say we have to cut down on lending to get our debt problem under control. However, now that the economy is slowing, they're forced again to start letting the loans flow again to keep the economy flowing. They just announced 2 weeks ago that they were going to increase lending to small businesses, to family businesses. So this is having, again, the effect of rising debt levels in China. So if China's slowing, a lot of companies are looking to India. Oh, well, India has all these people. Its population is going to pass China's in the next few years. It's going to be the world's most populous country. This will be our next growth market, of course. And yes, India is growing faster than any other large economy in the world, but there are some major issues when it comes to doing business with India. It's volatile. The economic performance of India has been up and down in recent months. Keep in mind, a year and a half ago, they took 85% of their banknotes out of circulation. You can imagine what that did to small businesses and to the retail sector. They introduced an entire new tax regime for the entire country. So there's been a lot of those type of issues. And then just simply the fact that the population in that country is growing so quickly. By the middle of this century, which is just 31 years away, the population of India is forecast to be 1.8 billion people. Basically 5 times the current population of the United States, even more. And it's a relatively small place geographically. So you can imagine what that means for the environment, for living standards. 14 of the world's 15 most polluted cities today are found in India. So this is something that's going to be a big issue. And of course, that's all playing a role in these elections that are coming up. The most important elections we're looking at in 2019 are India's national elections this spring. It looked like the government was going to win. A few months ago, everybody was predicting an easy win for the government. It is a business-friendly government. It is a socially conservative government, but at the same time, a very business-friendly government. But they had 5 state elections in India in December, and the government's party lost every one of them. There's one, of course, you know that if you've seen me talk before, there's 3 key markets in emerging Asia. The other one is Southeast Asia, home to 660 million people, double the population of the United States. You have wealthy places like Singapore, but you have some of the world's fastest growing economies, places like Vietnam, Indonesia, the Philippines, economies that have been doing tremendously well. They're receiving a lot of investment, particularly in manufacturing. As China becomes too expensive for labor-intensive manufacturing, people are looking to Vietnam. The Philippines is receiving a lot of investment in its service sectors. So Asia is doing well. If you take Asia as a whole, you take emerging Asia as a whole, it accounts for about 44% of all the additional economic growth in the world today. If you're looking for a consistent growth market, you have to be in the emerging markets of Asia. Even with the volatility in India, the current troubles in China, and some of the uncertainty in some other markets, there are no group of countries that provide you a more stable and consistent long-term avenue for growth than emerging Asian economies. Now, outside of Asia, it's been an entirely different story. Now, one region that's done okay is Central and Eastern Europe, and you really have to break this into 2 regions. You have Central Europe on one side, places like Poland, Hungary, Czech Republic, they're doing tremendously well. They're growing at 4 or 5% per year, some of them, even though their populations are shrinking. They've become extremely wealthy in just a short period of time. If you think about where they were when the wall fell in 1989 to where they are now, in simply 30 years, they've gone from being relatively poor emerging markets to practically developed economies on their own. On the other hand, you have Eastern Europe, which is Russia, Ukraine, Belarus. They've been doing terribly. The Russian economy has barely grown at all in recent years. They just came out of a recession. There's a couple of reasons for that. One, of course, we put sanctions on them, along with a number of other countries, and they're entirely dependent upon oil and gas and other natural resource exports. And when the price of oil and gas and minerals is low, the Russian economy generates basically no growth. So you have this country that has all these huge geopolitical ambitions, but what is the basis of a country's strength? It's its economic strength. You're only as strong as your economy allows you to be. And Russia is trying to act like a superpower with a very poor, underdeveloped economy. So that region's done okay, relatively speaking. The next 3 regions of emerging economies have all struggled significantly. The first one, of course, is the Middle East and North Africa. And of course, a lot of countries in this region are dependent upon oil and gas exports. And since 2014, as you know here locally, the price of oil and gas has been much lower than it was earlier in this decade. And so if you're a country like Saudi Arabia or Kuwait or Qatar or the United Arab Emirates who is dependent upon exporting oil and gas, obviously you've taken a major hit in recent years. Now, some of the region's more diversified economies, places like Turkey and Israel, they had been doing better. Of course, Turkey's entering into a pretty bad recession right now. Their economy overheated. There's some political issues there. Israel's done relatively well in recent years. But overall, the rate of growth in the Middle East has not been all that substantial. And keep in mind, this is a region where the population is growing rapidly. So they need higher rates of growth simply to reduce levels of poverty, to generate wealth on a per capita basis. Of course, we'd be remiss not to mention the conflicts in the Middle East and North Africa. It is a place where the war in Syria appears to be winding down. Not in in a way that the U.S. would have liked. There's still conflicts in Libya, in Somalia, in Yemen. There's a lot of instability in places like Iraq, in parts of Turkey right now. This remains an extremely volatile region, and there are fears that we're going to see an increasing amount of volatility in the coming years, in the coming months even. Another region that's been struggling is Sub-Saharan Africa. Now, if you were here 8 or 9 years ago, you remember I would mention that a lot of economists were envisioning Sub-Saharan Africa as the region that would eventually become the fastest growing region in the world in terms of economic growth. And that's because the region's population is growing so fast. By the middle of the century, again, simply one generation away, 31 years, the population of Sub-Saharan Africa will be 1.8 billion as well, almost 2 billion. So you look at those growth rates in the chart there, those are really anemic when you consider how fast the region's population is growing. There are areas in Sub-Saharan Africa which are doing pretty well, places like East Africa, a few West African countries that have oil or gas reserves. But on the whole, the region is struggling, and that's because the region's 3 largest economies, Nigeria, Angola, and South Africa, have recorded almost no growth in recent years. And then finally, the worst performing region, I think it had the title last year in my presentation, it's retained it once again, is Latin America. Look at those growth rates in Latin America. Nothing in 2015, 2016, and just above 1% over the last 2 years. A very, very disappointing result. Now, Mexico has actually done better than the regional average. Now, Mexico, in my opinion, has been a disappointment in terms of its rate of growth. It has sectors that are doing well, like the automotive sector, but other sectors like the oil sector, which are doing terribly. The trade, I'll talk a little bit about the USMCA, the trade agreement later, but that has at least given a lifeline for the Mexican economy to continue to grow going ahead. But look at all the other major economies. Brazil just came out of a recession where their economy shrank by 10%. This is a country, 210 million people, 10% decline. We would call that a depression here in the United States. So the largest economy in Latin America shrank by 10%. Now, the worst, of course, is Venezuela, and we should dwell a little bit upon that. Okay, one Browns joke. I was speaking in Munich last September, so Hugh Jackson was still the coach. And I was trying to explain how I was this fan of a football team who I really liked, and they were just terrible and incompetent. And this was before the turnaround. And I compared the president of Venezuela to Hugh Jackson. And I said, the worst coach. And I had, after the conference, a Venezuelan woman come up to me, and she said, Michael, I don't know anything about American football, but that Hugh Jackson must really be an idiot if he's as bad as our president. And, true story. Okay, that's it. I promise no more. They're going to the playoffs next year. Right? That's one of my predictions. But anyway, Venezuela is now interesting because there is a real possibility that we are going to become militarily involved in that country. Now, the Obama administration and the Trump administration had both threatened to use force against what was then the Hugo Chavez government, now the Nicolas Maduro government. But it wasn't realistic, and it had almost no support in Latin America. That's changed. You now have a president in Brazil who's really trying to curry favor with President Trump. You have a new president in Colombia who is openly talking about using force to get rid of the president of Venezuela. And you have 3 million people that have fled that country in recent years because of its utter economic collapse. So there is now, we are in a situation where things are happening very quickly, and there is a real possibility that we end up using some type of intervention to oust the president of Venezuela if he doesn't go on his own accord soon.